Hi, everyone. Well, I tell you what, I said it was going to be choppy, and it looks like that's what we're getting going into the summer. However, besides that chop, what we now have is a New York Stock Exchange and a Dow Jones Industrial Average hitting new highs. So, our overall market model is still under a sell signal, which is odd. And it's only because the volume to these new highs is all wrong. Now, internally in my brain, the Dow Jones Industrial Average NYSE is on a buy signal. The S&P 500 is neutral. Nasdaq and the Russell 2000 continue to be under a sell signal, clearly well below the 50-day moving average. And these leading stocks are what I care more about. I believe that we're not going to see, since we didn't see the breakdown in April, like I believe that we were. I now believe that we're going to have to get that 50 200-day moving average right on top of each other. When those two lines kiss, if we move sideways and then break down, I believe then we'll have our flush. If we don't do that, then more than likely market's going to rise. Normally, you actually need interest rates to rise, start rising before a big market turn down lower happens. But for me, the tapering, reducing the tapering like they do every month, that's signs that they're tightening already. I mean, because without the tapering, we're not going anywhere. QE and tapering, and this market's fucked. 2008 would have just continued on and on. So the fact that they're reducing tapering, to me, that's like hiking interest rates. So we're just biding our time. And the S&P 500 back in the year 2000, don't forget, it went to new highs while the Nasdaq and Russell 2000 sold off before finally rolling over. However, all these pocket pivot point buy signals lately compared to the ones that are in February, in between them we had three pocket pivot point sell signals. So these aren't exactly the best, but still volume is there. It's above average on two of the three sessions, so we can't deny that. And my scans are just loaded with New York Stock Exchange stocks, so there's no reason fighting that. However, our model still remains under sell signal because leading stocks still look absolutely atrocious in growth industries. So on that note, the SPXU, we're going to go ahead and get rid of 50% of that now. If my SPXU can close below the lows here of 53.75, I'll get out. And I know that that is going to coincide with the SPY breaking out to a new high too. So basically, if we can get the SPY, SP 500 break out to a new high, SPXU has to completely come off. SQQQQ, I'm only taking off 25% because from where we got our long signal, we got a very good fill that day, but we are now closing below that low a day 55 for the second day in a row, so that's confirmation for me. So I'm going to go and get rid of 25% of that, but with it still above the 50-day moving average and the Nasdaq looking like shit, volume below average again today, I'm willing to go ahead and hold on to most of it. FAZ also, from our signal date, you can now see we got a good open at 2067, but we're now closing below 2016, which is below that signal date low a day. I'm still using this one for a 50% sell, the low a day 1980, and then we'll get rid of the rest of it if it closes below the April lows. But I want to keep hedges on here just because I just don't like the way this market looks. And even if we do move higher, how much higher do you really think we can move with a VIX at 13? I mean, yeah, granted, VIX can get below 10, but still, how much higher is that in stocks? It's only a very limited ways away. And this was the first sell-off where we basically saw no fear in the market. We didn't even get to 20 this time around, so there's still no fear. And Investors Intelligence still shows a very high amount of bulls and bears. So, I still think that this market's screwed. Especially if we start to see rates rise, but I ain't going to fight the trend of big cap stocks, and that'll get into our new long positions after I show you this. STAA is a full sell. I know it's still above the 50-day moving average and still technically above the lows of the day, the final cut loss level of 1633. But you know what? The third day in a row of this kind of action, look at the volume for the 3 days, and with the red BOP growing again for the second day in a row, let's just get out. So STAA is a full sell. Now, with all those sells, we're going to go ahead and go into three stocks. The first one is HF. HF has earnings behind it, bouncing right off the 50-day moving average. It's not producing a pocket pivot point buy signal, but it has had two of them lately, and with no pocket pivot point sell signals in between. So with the move right at the 50-day moving average, it's a pretty good reward risk ratio. My luck's been pretty bad in 2014, just like it was in 2011 and 2012. But like I always say, if I it wasn't for bad luck, I wouldn't have any luck at all. So the good news is that all my gains come from complete skill. So that's about the only good news about that. The bad news is that, I passed on BEE yesterday, and of course it works. So I guess that's what just happens in a market like this. Also, HF 5% long signal. WAG is also a 5% long signal. Earnings aren't until June, so earnings are behind it. So this move right at the 50-day moving average with the pocket pivot point signal is very solid. We have had we've actually have had a few pocket pivot point sell signals in between the last pocket pivot point buy signal in January. But overall, the price chart looks pretty solid, and besides WAG giving a signal, RAD is giving a breakout signal. This one is not a 5%er because it's only a $7 stock. And because we're in a mixed market, and I'm not sure what the hell the market wants to do, as probably does nobody else. How in the hell can you be 100% bullish or bearish here? It's just insane. So RAD is going to be a 2.5% position, WAG is going to be a 5% position, and HF is going to be a 5% position due to the risk-reward ratios in all the stocks involved. The other long signals to consider were PAG. I'm passing on that, so enjoy watching that one run, I'm sure. Also notice 3 pocket pivot point buy signals to no pocket pivot point sell signals in the pattern. My problem with it is that the pattern PAG doesn't really always like to break out and have smooth runs higher. It seems to be a little choppy, but following earnings could be different. A lot of other ones. FI still has earnings to come. ARII still has earnings to come. AFG still has earnings to come. TXT still has earnings to come. BWA, all these were signals today, all have earnings to come, so none are actionable. Thank you.